Hey everyone, welcome back to Corporate Decoder. Today, A.L.CY has filed a report after receiving a notice from Nasdaq, and we are seeing a clear path to the over-the-counter market. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is about to be delisted from Nasdaq, and we need to understand what that means for investors. Alright, so what we have here is an 8K filing, which is basically a report for important events that shareholders need to know about immediately. In this case, Alchemy Investments Acquisition Corp 1, or ALCY for short, has received a notice from the Nasdaq stock market that its securities are subject to delisting. The earliest event reported here is May 7, 2026, and the report itself is dated May 8, 2026. This tells us how quickly things are moving. The company is incorporated in the Cayman Islands. This is typical for many special purpose acquisition companies or SPACs. And yes, they are an emerging growth company. This means they are a relatively new public company with less than a certain amount of revenue, and they get some regulatory benefits. Now, let's look at what is actually traded on Nasdaq. They have units which include ordinary shares and warrants, the ordinary shares themselves and the warrants. These are ALCYW, A.L.CY, and ALCYW. Here is the core of the story. On the 7th of April 2026, A.L.C.Y got a notice from Nasdaq. They failed to meet a rule called IM-5101-2. This rule for special purpose acquisition companies requires them to complete a business combination, essentially buying another company within 36 months of their initial public offering registration statement becoming effective. That registration statement became effective on May 4, 2023. So the deadline for A.L.C.Y to find and merge with a company was May 4, 2026. They missed it because they didn't complete this business combination by the deadline. Nasdaq is suspending trading of their securities at the opening of business on May 14, 2026. After that, a form called a 25. ANS will be filed with the CAC to officially remove the securities from the Nasdaq listing. The company says they are not going to appeal this decision, so trading will stop on Nasdaq, but they expect their securities to start trading on the over-the-counter market, or OTCC, on the very same day, May 14, 2026. So, what does this mean for investors? Moving to the OTC market is generally seen as a downgrade. Stocks on the OTC market are typically less liquid, meaning it is harder to buy and sell them quickly without affecting the price. They also often have less stringent reporting requirements and can be more volatile. Think of it like moving from a major highway to a small country road. For companies that were SPACs and failed to find a target, this delisting is a common, albeit unfortunate, outcome. Many SPACs, especially those that went public a few years ago, are now facing similar deadlines. This situation is actually quite common. We've seen other SPACs struggle to complete mergers within the allotted timeframe, and consequently end up delisted or facing significant volatility. Companies like some of the blank check companies that IPO'd in 2021 are now facing these 36-month deadlines. Historically, about half of these SPACs that miss their targets either liquidate or end up on the OTC market. For now, investors should expect trading to move to a less regulated environment. The report is signed by Mattia Tomba, the co-chief executive officer, on May 8, 2026. Ultimately, this filing signals a significant event for Alchemy Investments Acquisition Corp 1. The company is moving from a major exchange to the over-counter market due to a failure to complete its initial business combination within the required timeframe. This move often brings increased risk and reduced liquidity for investors. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.